What is going on today? I'm going to be walking you guys through a trade that we're currently sitting at 10 RR on. As you can see though, with the executions, we got stopped out. So I'm going to go over how you could have taken this trade, what I did wrong, and yeah, just kind of show you where I was at today for market. So going into the day, let's go ahead and go into like the hourly or something, higher time frame, right? So going into today, what I knew from before today was that we had FOMC yesterday, so the entire beginning of the week we just been chopping to the upside, kept shoving up, shoving up, shoving up. We had this new week opening gap right in here that we have not filled, and once you have a new week opening gap later in the week that you've not filled, it's a pretty strong draw on liquidity. So I was low-key bearish going into today, especially with all of the bullish news being released, and so now it's already been priced in. So I'm expecting some sort of a sell-off, people taking their profits, so that we can move back down towards that new week opening gap. So that's my kind of overall thesis going into today. But if we go down into like the 5 minute here, just to further along that thesis here, let me turn on these sessions as well so you can see. Okay, so we have London session here, which kind of consolidated overnight, but then in the pre-market we were getting a nice start to that sell-off to the downside. You can see Asia session, we chopped to the upside. Right after Asia session we dropped off, so you really get a clearer picture of what we did here. We swept out the highs from Asia. During Asia session we swept out New York's highs, had a nice sell-off to the downside. London chopped upwards and then sold off again. So we keep selling off. It's showing that we have some bearish bias here. As you can see, we have this nice gap in here, probably on the 15 as well. We respected it. We moved to the downside. We didn't even take out the lows, but we kept dropping to the downside, right? So after market opened here, you can see we had this huge sell-off to the downside. We swept out this low over here. We swept out this other daily low here, and we even swept out London lows back here. Now this low on the daily time frame, I'll pull it up really quick, is a fair value gap. So you can see this huge gap in here. So I've just marked out the bottom of this wick, so I knew exactly where that gap would start, because I'm not going to mark out the whole thing, right? There's no point. So market opens again, we just fall straight down into that daily fair value gap. That's a good place to look for longs from, in my opinion. However, with that new week opening gap down below, we don't really want to be taking longs. However, there was ideas for longs there, because one, we tapped into that daily fair value gap, and two, we have these relative equal highs up here. So if you were looking for longs there, I totally agree with you. Definitely a decent spot to be looking for longs if those are your confluences that you're basing it off of. Me personally, I had no long opportunities because of these huge gaps right here, because I would have wanted to see them inversed. Just with my bearish bias, things like that, I would want to see these gaps inversed before I was confident in any longs. Now, you might be asking yourself, okay, well, why after we inverse them did you then look too short, right? That is a good question, but here's why. Because I was already bearish. We're late in the week, and we have that new week opening gap down below, but then I pulled this fib from the high to the low, and it directly lined up with the daily open. And when you have levels that line up that well, it's pretty, it just adds confidence to your trade. So since I saw those levels line up, I was like, yeah, this looks great for a short. And then I'm thinking to myself, would I be mad if I lose this trade? The answer is no, I would not be mad, because we have a great golden pocket with a bearish high time frame bias aligned with the daily open. Those are three smooth confluences for me to enable my short. So what I did is I just set a limit order, because I was like, this is such a clean level. We can just limit order this with a 15-point stop just a bit above the 0.66. I was aware in my head that we could go a little bit above this into the golden pocket right here and get stopped out. Now, unfortunately, that's exactly what happened. So how, moving forward, can I fix this trade? Because people in the Discord that I trade in also caught this same trade. So as you can see here, boom, I said, bro, I'm pissed. How do I prevent this from happening, right? This guy Crouton took the exact same trade. We both are kind of learning the same way. Even Ye Goated took a similar trade. So I'm just asking him, like, how did you guys get this without being stopped out? And Crouton gave me the answer here, because he did it, perfectly, right? So basically what you want to do is, because this was the 9 a.m. open right here, 10 a.m. if you're, trading off New York time, but for me, I'm in Central, so it's an hour earlier, okay? But this was the 9 a.m. candle, which means it's even more volatile than the previous or the following candle because it's the 9 a.m. open. And not only that, we're only 30 minutes in a market open, and New York session, especially during the beginning, the first 30 to hour of New York open, is just going to be more volatile than other times. So those two things going hand in hand, we have the 9 a.m. open paired with just the open of New York session in general. Those are very volatile. So it doesn't really make sense to limit order with a 15-point stop unless it's like a horribly stacked, not even horribly, like an amazingly stacked level, which this only had 2 actual level confluences, whereas the other one was just a bearish bias. So limit ordering this was not the smartest idea. I know a couple other guys on the Discord did the same as me and got stopped out, but what you should have done instead was wait with the market order like ready to go. Like you're sitting here with your units up, all the shit ready to go with a market order. Then all you're doing is watching this wick reject. So as you see us reject this, you could order, send that market order at the daily open after we've rejected up here and we're coming back down. You could even do it at the closure of this candle. That would have cooked your risk to reward though. Or you could just simply wait on this candle to close and then use that as a rejection block, which is not the best one either. In my opinion, the best option would have simply been sitting here at market price, with your order ready, seeing this wick come up, and then as it's falling down, you click boom order and then drag your stop loss up just above this wick here. That seems like the best thing to do. That's what people in the Discord did, and they captured this. But let's imagine you had just purchased like a funded next account, 25k rapid, okay? All you had to do was risk, if you took this trade, let me drag this over, okay? Let's just imagine it's a new position, okay? If you short it at the daily open and you put your stop loss just above this wick, right? So what you do is you sit there, you're waiting for market to come up, the wick, we're wicking above, and then as that wick's coming down, boom, you market order once we get down, once we break down below daily open again, you market order. So now this is your trade here. All you have to do, if you're on a fresh funded next account, 25k, you risk $500. That's your TP, and congratulations, you have yourself a funded account. That's all you have to do right there, because that's a 3 RR. The profit target is 1500. That right there is your past account. That's all you had to do. So unfortunately, I fumbled the bag today by limit ordering. So if there's anything you can take away from this video, it's only limit certain things, maybe higher time frame stuff, I don't know, but do not be limiting these low time frame plays here. This is definitely market entry plays, so learn from my mistakes so you do not get stopped out. But you can see we've currently ran to a 1 to 10 RR on this trade here. If you were holding just to that daily fair value gap or this previous low, it would be a 1 to 15 just about. And if you held a runner all the way to the start of the new week opening gap, you're looking at a 1 to 30 risk to reward. Now, as you can see by this video, there was not any crazy confluences, nothing, high time frame insane like wick theory, nothing insane here. It was all very simple. We have a new week opening gap. It's unfilled. It's later in the week and we haven't filled it. We have already just been chopping to the upside. FOMC came out. So now what is the bullish bias here? Like, what is it? Just because we're near all-time highs or because we have those equal highs? Sure, those are both, valid things to say, but the idea of we have to fill that opening gap is very important, seeing that we were, respecting bearish PD arrays. And again, let me show you that, because this heavily went into my bias as well, right? We had this huge 15-minute fair value gap in here that we were respecting. We had these bullish gaps in here that we disrespected. We closed below it. We opened up new fair value gaps that we're not revisiting. So we were clearly bearish here. Okay, so that's kind of where I was going for it today. And that's how we captured that trade. Unfortunate that I got stopped out, but as you can see today, I'm not even upset. You're pissed because you got stopped out, like in general, like, oh, I took a losing trade, but overall, like, I'm not pissed. My emotions are affecting the way I'm trading. I'm learning from my mistake. I'm seeing what I could have done better so that next time I can do it better and I don't have these same results. Because look, I was on the right side of the market. I just limit ordered and got stopped out by one minute wick. This is still a very good winning day for me. And yeah, so that's kind of the takeaway for today. I hope you guys learned something and can use this in your trading. If you guys have any questions or want to trade with me, it's discord.com or discord.gg/TTP. Take that profit. So TTP, Discord/TTP. That's where I'm trading at. There's other people in the Discord. A lot of people will help you out in there. Angus is the owner. Very good trader. Has a lot of education already out and coming on the way. So if you guys want to trade with me, join that Discord. But I hope you guys did enjoy this video. And that's pretty much going to do it for me. I hope you guys, yeah, I keep yapping. I don't know why I keep saying that shit. All right, peace out, y'all. I'll catch you on the next one. I'm out.